Howdy, y'all. Welcome to Liberty Call. Today is Wednesday, April 26, 2023. I am Raymond Dahlman, your humble host here at the Liberty Call. Hope you're having a fantastical day. You can see my boy Jake back here. He is itching to go play. He hates sitting here in the office during the workday, but unfortunately, we can't go outside because we got somewhere between, 6 to 12 inches of moisture over the last 24 hours, and it is some snow, mostly wet stuff, and the front yard is a squishy, disgusting mud pile right now. So anyone who's experienced snow in the spring or the fall knows exactly what I'm talking about. It's not cold enough to keep it solid, and unfortunately, it is just a big squishy mess outside. All right, if it's the first time watching Liberty Call, thank you for being here. Give me some, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I would greatly appreciate it. Not the best day in the markets. Things, the overnights, or not the overnights, the futures overnight looked pretty good. I checked them a couple times in the middle of the night, and then first thing this morning, things looked okay. But then I guess some of the contagion from First Republic has, been weighing on things, and even a good earnings report from Microsoft couldn't really hold up the market. So let's go ahead and dive into the numbers and see how they performed. Dow Jones was down 0.68 or 229 points, closed at 33,301. S&P 500 down 0.39%, closed at 40.55. NASDAQ was up 0.39%, closed at 11,844. The VIX was up 1.76%. It's at 1909 right now. Canada was down 0.36. Brazil was down 0.85, and Mexico was down 0.66. Jumping over to Europe, Germany was down 0.48. UK was down 0.49%. France was down 0.86, Netherlands down 0.77, Spain up 0.04, Italy down 0.54%, Switzerland down 1.29%, and Portugal up 0.03%. Russian exchanges both red today. MOEX was down 0.25%, the RTSI down 0.28%. And the overnights in Asia, more red. Starting out with the Nikkei in Japan, it was down 0.71%. Australia was down 0.08, New Zealand down 0.47. Chinese markets, the Shanghai was flat, down 0.02. The Shenzhen component up 0.33%. China A50 down 0.03. DJ Shanghai flat at 0. Hang Seng up 0.71, and the Taiwan weighted was up 0.03%. So again, it just seems like people are just waiting for the next shoe to drop. It's kind of what it seems like right now. Folks are just, they're wondering, is the market going to go this way or this way? And, again, you can kind of look at the tea leaves, look around what's going on in the world and make an educated guess. But I know a lot of folks are hoping that the Fed is going to stop raising rates, start printing money, make the stock market go up through inflation. But as we can see over the last 3 years, was that really a good idea over the last 3 years of all that money printing? And I mean, I'm not even going to get into the whole, was COVID as serious as they made it out to be? Was there some alternative reason behind the scenes? I don't know. But what I do know was we could have done nothing from a financial standpoint, and we would be in a much better place today than we are right now. All right. Let's go ahead and jump over to today's market recap. S&P 500 gives up gains despite Microsoft-fueled rally in tech. The S&P 500 saw a decline on Wednesday, giving up early day gains despite a surge in tech stocks led by Microsoft Corporation. Following a release of better than expected quarterly results, Microsoft Azure cloud business performed better than anticipated, with the company's revenue growth of 31%, drawing praise from analysts at Wedbush. Despite initial positivity surrounding Alphabet's better than expected quarterly results, concerns regarding the company's spending and hiring plans caused investor sentiment to wane. Boeing also received attention from investors following the company's better than expected quarterly revenue and plans to increase production of its 737 jets. Chipotle Mexican Grill saw a 14% jump in its stock price as a result of its better than expected quarterly results, which were boosted by price hikes. First Republic Bank was a notable laggard, experiencing a 20% decline in the stock after releasing disappointing quarterly results earlier in the week. The regional bank reportedly reached out to major Wall Street banks for financial support following its $30 billion rescue deal earlier this year. PacWest Bancorp, on the other hand, reported earnings that exceeded Wall Street estimates and saw stabilized deposit outflows, resulting in a positive stock price trend. Energy stocks declined by nearly 1%, with oil prices continuing to slip due to ongoing fears of a recession. Activision Blizzard experienced a significant drop in stock price after UK regulator blocked a $69 billion takeover by Microsoft over antitrust concerns. Despite the tech sector initially boosting the SP 500, the overall decline in the index was largely due to a combination of factors such as negative sentiment regarding Alphabet spending plans, concerns over the energy sector, and the negative impact of UK regulators' decision on Activision Blizzard. All right. Well, that was everything in the market recap. So again, things are just kind of meh right now. Like I said, I think things are probably going to get much worse in the foreseeable future, but there's really not a lot we can do about it other than just, it's kind of like a hurricane coming toward you when, growing up in Houston on the Gulf Coast, there's not much, you got a couple of options. You can board up your house and leave. You can board up your house, get a lot of supplies and stay. But that's really all you can do. You can't stop the storm. And that's kind of the situation we're in right now. All right, next up, U.S. goods trade deficit narrows sharply in March. Retail inventories rise. All right, U.S. Trade deficit in goods narrowed significantly in March as exports increased and imports decreased. The Commerce Department reported that goods trade deficit dropped by 8.1% to $84.6 billion last month. The increase in exports of goods was primarily driven by industrial supplies, which include crude oil and motor vehicles, as well as consumer goods. Food exports declined by 4.5%. In contrast, imports of goods declined by $2.5 billion to $257.3 billion, pulled down by a decrease in industrial supplies, capital goods, and other goods. However, imports of consumer goods increased by 2.4%. The Commerce Department also reported that wholesale inventories edged up 0.1% in March, following a similar gain in February, while retail inventories increased 0.7% after rising 0.3% the prior month. Excluding motor vehicles, retail inventories rebounded by 0.4%, which is an important component in calculating gross domestic product. Trade has contributed to GDP growth for 3 consecutive quarters, with inventory investment being the largest driver of GDP in Q4. The GDP estimate for the first quarter will be published by the government on Thursday, so that's tomorrow. According to a Reuters survey of economists, GDP is expected to have increased at an annualized rate of 2% in the last quarter compared to a 2.6% pace in the fourth quarter of last year. The sharp narrowing of the trade deficit in goods in March bodes well for U.S. economy growth in the first quarter. So, hey, some positive news. It's not all doom and gloom. All right, one last article here comes from our friends at Mises Wire. It's titled "Government Budget Deficits Cannot Stimulate True Economic Growth." It's written by Frank Shostak. Get my notes up here. All right, so the debate over whether governments should run large budget deficits to support economic growth or balance their budgets is one of the most fundamental differences between Keynesians and Austrian economics. Keynesian economists believe that during a recession, governments must increase spending, run large deficits to stimulate the economy. On the other hand, Austrian economists argue that increasing budget deficits leads to general price increases, and the government should instead balance the budget. So based on the last 3 years, we have a perfect case study of this right now. Did spending money help us, and having huge deficits and money printing, did that help us? Or has it hurt us in the long run? My guess would say it has hurt us. But, some people probably 2 or 3 years ago were like, yeah, I got free money. It's not free. All right. Budget. Austrian economists believe that governments do not create wealth and that the government spending takes resources from wealth-generating activities, which leads to economic impoverishment. They argue that the effective level of tax is the size of the government, and the government should not increase the budget deficit because it diverts resources from wealth-generating activities to non-wealth-generating activities. The government cannot contribute to the pool of real savings as a wealth consumer, and taxes stifle market processes, reducing producers' well-being. The more non-market related projects the government undertakes, the more real wealth is transferred from wealth producers. In a money economy, government taxes wealth generators and pays out the take to people employed directly or indirectly by the government. The government cannot borrow money because a borrower must be a wealth generator to repay the loan and interest. Lower government outlays imply that wealth generators will have a larger portion of the pool of real savings at their disposal. Critics of smaller government hold that the private sector cannot be trusted to build up and enhance the nation's infrastructure. However, individuals decide what infrastructure emerges by buying or abstaining from buying, and increasing government outlays cannot raise the pool of savings, and increased government spending will only reduce it. Government can force the creation of non-market chosen products, but it cannot make them viable. Over time, these projects will impose burdens on the economy that undermine individual well-being and will make these projects even more costly. Finally, if lowering taxes is not matched by a reduction in government spending, this will encourage misallocation of savings. All right, pretty good article. It's attached in the show notes if you want to read it in its entirety. That's just a summary that I put together for you. But again, I'm very much an Austrian when it comes to the economy and economics. And granted, I'm certainly no expert. I'm merely a student of the craft at this point in my life. But just from a common sense perspective, I mean, if printing money and creating inflation was good, I mean, Weimar Germany would have been successful, and we wouldn't have had World War II and all the problems that were created after World War I, and how the League of Nations punished the German people. But hey, those who don't study history are doomed to repeat it, unfortunately. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.